So of course that 261 up there does have a B point, 462 points down. It's a good hedge area when we get there. And we should also expect it to, in the short term, return to the blue bar, as that's relatively easy. We're so close to the 261 that has a B point, 462 points down. We're like right there almost. Yeah, we're connecting with that 261 point gold bar now, which is crazy. So it's not very eager to do anything, but the short term, it is going to be looking at getting back to that blue bar. So that can take a long time with this ATR though, so we have to keep that in mind. There's trends that we can draw in. This blue line as well, that's like even shorter term. And as of now, like if I was to recall on, what this is most similar to, many of the 261s and 61s that we've seen, we've broken through them to test them from the other side. And that process right now is what we're doing, testing that 61 from above. It's not incredibly eager to do anything. Like, doesn't matter how long ago we were looking at that level. Doesn't matter. Today we come to it at a time like this where it's clear that the institutions have been working all night to make sure that only holders get the run. That's why I said so much to hold. It's funny that they started the market up so high, and the first thing that they create is a 5-wave move that's incredibly steep and really slow. The yellow line on the short term's getting a response now though. But ultimately, keeping the long is really important, and looking for the hedge is the second most important. But not using really heavy size when you short it is important too. Could make something that looks like a head and shoulders as well. We have a new trend as well, yeah. So we're basically testing the 261 from above. Definitely good area for profit taking on hedges if you did take any hedges from the break of the last trend. So now we're under the 261. Everything that was acquired above it can now be held with a stop and profit. Well, both of the blue lines are the short-term supports that are untested. At some point will be tested. It doesn't really matter from where, but I know it is within the future for us to do that. But I know that if you've gotten away with hedging it or shorting it before the break of the last trend, there was a pretty decent buffer there now to make sure that you're safe, so that you don't, 1, experience a loss on that trade, and 2, you've been paid something, 3, you're exposed if it does drop 462 points, and that's great. Doesn't have to be with a big size. I'm against big size trading on these days where there's particular reversals. Obviously the institutions are doing it a particular way, and it doesn't seem like there's any people affecting them. It's like they're pushing the plan. They know that they've pushed it high enough to make it to the point where people aren't going to be chasing. And now we're going to see an environment switch. Like the way that it's not breaking the trend, like that is going to hurt a lot of people. Low size is important. I don't care how slow it seems like it's moving. That's the trap. Still, if you got exposure, when I put the trend in, there was how many minutes? 1, 2, 3, 4, 5, 6 minutes since the trend broke after I put it in. 6 whole minutes to acquire something, not a large thing, but to test the 261 from above. Now the downtrend is breaking at the 261. Like the commotion was about getting back to the 261 from above. Now that we've done it, the trend has struggled to break. Do we wonder why? It makes it hard for people, to buy so late in the trend. Clearly the institutions worked all week last week to acquire a position that they did this on top of. Literally, this was the level that we're going to break to the upside. Look at all of that. It was all held through, right? You see what I mean? All of that stuff, making it this as far as this one, break of the red yellow. That is huge. From all of these lows in these ranges, we knew about the value of the reversal. And how many times did I say hold? I don't know, but it keeps you safe. Because you don't have to figure out where the bottom is every day, do you? And I talk about it every day, and everyone just wants to do the hard way because it's within their nature to start afresh every single day. I mean, today's not a day where the market respects those that start afresh. What about that? What about when there's only one day every 7 days where there's actually the beginning of an institutional trade, and they actually, take it hundreds of points, and it's easy to be a part of, and all you have to do is see how easy it is to be a part of it. If you see their plan, then it's easy to follow. Like, it just takes time and discipline. Like, in order to get exposure to this run, like, you had to endure many pullbacks inside of this range, where every single day, started out on Tuesday, it pulled back 78% of retracement, and then more. Wednesday pulling back even harder, and then people on Thursday got pulled back even harder, And then finally, by Friday, every single person in that week was able to hold. But guess what? Unless they were holding from the bottom, next week it came all the way back, 61% of the way, even more, just to make sure that everyone that bought above that gold bar wasn't allowed to be safe. Like all of them, they jabbed pretty significantly down into it. It was like all the people that didn't have below the lows of Thursday, below the lows of Wednesday and Tuesday. It was the people at the bottom that they allowed to keep in there. And it's like, if you chose the persistence route, where every single day you want to try and persist with the market and try and catch every single low because you know you're late on the plan and you know the plan's going to play out and it's got so much space. But even if you did that, you know, you still have to pick your own tough, because if you don't have the discipline to hold through the big retracements and all of that time, you don't have the integrity to allow it to pull back. I'm like, you know what's funny is this is what it takes to be in from the best price. How many times did it pull back? So many times. We knew from that price it was a keeper. You know, on that day, I wrote this. We knew the value of it coming up. You know what I called that? Short-term news. All I said was that it was an insignificant short-term report. You know what I mean? And then from understanding the 261 that was 462 points down, you know, we knew that breaking through that high could at least get us up to that point, but it could also make a movement that gets us all the way back down to this high. And you want to know what's funny about doing that? Is if we did that, it would only be a 61. Do you see how the 61's there now? So that's crazy to me. So literally just doing a mere 61% retracement means that all the people that were in for any of these days and all the people that were in for that sideways consolidation and everyone that waited and waited so we could finally get here, guess what happens to them? They get wiped out because they're not in from the best price of the trade, because they don't understand this trade. They don't know that the value was in from this point where they pulled back many times, where they had many days of sideways. You could say they threw everything they had at people just to make sure you weren't in for this easy plan. And then you get days like this where you come in, you're still holding, and you pat yourself on the back for holding, and then they're up 160, 170 points, and all you have to do is focus on where it's going to come down from.